Hello Australia, welcome to My Millennial Money. I'm Glen James and this is
John Pidgeon
and
Lonny Hawkins.
And we are today talking about all the types of insurances that might be in your world. So just to give you a bit of a teaser of what we're going to talk about, we're going to talk about business insurance. If you're starting a small business or if you've got a small business, we're going to then talk about our personal insurances, so travel insurance, our expensive bling. We're going to talk about if you're an investor, all those types of property insurances. And it's going to be a wild time and I'm looking forward to it. But before we get into today's episode, I just want to thank our show partner, Sunsuper. They've just been collecting awards like they're going out of fashion, haven't they?
Cleaning up, aren't they?
Just cleaning it right up. Sunsuper have been awarded Super Ratings 2020 Fund of the Year for having the best value end-to-end product offering for its members. Since 2015, they've also held CanStar's highest 5-star outstanding value rating for basically outstanding value superannuation. They've also been recognised with multiple awards from the likes of Money Magazine and Finder. So there are hundreds of super funds in Australia and these guys have won awards year on year. So they must be doing something right.
Yeah, they're up there.
And we are so fortunate to have Sunsuper as our show partner. So do yourself a favour, head to sunsuper.com.au/M3. Check out the goods if you are looking to review your superannuation. All right, Lonny, you ready to have a chat?
Let's go.
Let's go. You ready, John?
Let's do this.
All right, Lonny. How are you?
Very good.
Well, John,
Glenn.
strap yourself in, baby, because it's going to be a wild one, this.
One of the exciting ones.
Yeah, so insurance is, it's part of everyone's life, okay? And we won't be covering all types of insurance under the sun, but we'll be covering some broad brushstrokes. But I think it's first important to understand the concept of insurance, Lonny. What is the basic concept? Because you are an insurance broker and we'll get to that, but what is the basic concept of insurance?
Insurance is there to transfer your risk. So if you've got something that you can't afford to lose, you need to have insurances on that and get somebody else to pay for it if something goes wrong.
And I guess an example of that is insurance is a pool. So if the three of us here all had a car each and we all had car insurance and there was just, we self-insure between the three of us, we might put in $1,000 a year into our own little bucket. And our actuaries have worked out that the chances of the three of us having a total write-off in the 1 year is very low. So that means we all fund the $1,000 a year pool, and then that might build up to $20,000 over the years. And then if one of us claims, we pull the money out of the pool to help us. So it's kind of like an insurance pool. And within the actuarial committee or department of the insurance company, they work out that how much can we charge Glen, John and Lonny to cover the risk of each car being at a total loss or partial loss based on all the variables, how old he is, how old the car is, the location, all that stuff, and still make a profit. So it's a wild thing, insurance.
More claims, more costly, the premium generally speaking, Lonny?
Yeah, definitely. And that is something that obviously goes into it. At the end of the day, these insurance companies are companies and they're all there to make a profit for their shareholders. So some people will think that they're gouging a little bit and trying to earn too much, but we're still got to be able to have enough money in that pool to be able to pay for all claims.
Yeah. So we know that we don't want an insurance company to go under, so it's okay for them to
definitely
make a profit.
The thing that gets me a little bit is people prioritise different insurances based on their appetite in their life, and one of the first things when times are tough to go is potentially an insurance policy, isn't it?
Yeah, absolutely.
We see that regularly. I was working down in the Riverina a few years ago and dealing with farmers down there, and when they'd have a really good year, they've got all the money to burn, yet they'd go, okay, now I can insure because I've got the money there to pay for insurances. When really, that's the best times when you shouldn't have insurances because you can self-insure. And then in those tough times in the middle of a drought, you obviously go through those stages where you can't afford to lose anything and you can't afford to pay your insurance bill. So it is a catch-22.
Yeah, so Lonny, you're an insurance broker. What is an insurance broker and what do they do?
Insurance broker is there to act on the client's behalf.
Right.
So an insurance broker will get an understanding of the client's particular needs and find an appropriate policy to suit what it is that they're looking for and what needs to be covered.
Yeah, right. So is that similar to almost the mortgage broker, do you think, John? Like in your...
Yeah, I use the comparison when I'm talking to clients. Say, well, I personally don't recommend just going purely to a bank. I'll always look across, using a mortgage broker to look across multiple lenders. And I say the same to clients about insurance is time, effort, knowledge. Much prefer to use an insurance broker as opposed to trying to find one company. Is that fair?
Yeah, look, it's as an insurance broker, you've actually got more access to more companies.
Yeah.
You are able to deal with companies that don't deal direct with the public. They'll only deal with insurance brokers.
Yeah.
And that goes with particular products as well, that they won't deal with direct to the public.
Yeah.
So yeah, you do need to, at times, you need to deal with an insurance broker to find a broad spectrum.
Well, it'd be like if I was self-employed or had a weird job, like if I was a sports person, had lumpy income and wanted to go to get a mortgage. If I just went to bank A, they might go, well, we don't cover you.
Yeah.
And then you run away with the tail between your legs going, oh, I can't get a loan. But you go to a mortgage broker and they say, oh, hey, no, there's 3 banks over here that will specialize in you. And it'd be the same with insurance brokers, right?
Yep.
So
the insurance market is completely different. Every insurance company is completely different. They do have what they like and what they don't like.
Yeah.
And that's part of the business of being an insurance broker. Same as a mortgage broker. You can then, when a client comes in to see you, you understand that, hey, I'm not going to take it to this particular bank because I know that they don't like the particular scenario around that client.
Yeah.
So we're going to go and over years of experience, you do get to learn that there are certain products there in the market that you can't use.
So this is just my naive experience, but I see a lot written as the underwriter being like Lloyd's out of London. Is it common that it's all offshore, basically underwriting the whole insurance within Australia, or is it local underwriters?
Here in Australia, we do have large international insurers that are licensed to deal here in Australia.
Yeah.
So let's take, for instance, QBE. They're actually known as QBE Australia here in Australia, but then they've got the backing of the large corporation around them of QBE worldwide. Now, Lloyd's of London is a special set up there where it's actually a conglomerate of insurers all get together and come up with different pools.
And that would be more, I've got this piece of artwork worth $45 million.
Yeah.
You know, I don't think QBE are going to do that.
No.
You might have to go to Lloyd's to put it to a pool of...
Yeah, and Lloyd's of London kind of acts like a reinsurance in that that it's a conglomerate of insurers that get there.
Yeah. Okay, sweet. So how do you get paid? Like a mortgage broker might receive a remuneration from the bank that they're placing the mortgage with on behalf of the client.
Yep.
How do most insurance brokers get paid?
Insurance brokers receive a commission based on the policy that they actually sell. Now, that can range from $0 or 0% up to a certain percent. I think most of the time it's about 30%.
Sure.
But that'll change depending on where else. And then they also charge a broker fee as well.
Yes.
And that's all built into the pricing.
Yes.
So the common question is, I suppose, if someone like yourself is taking 30% for obviously doing the work, can I go and get the same policy for 30% discount is the common elephant in the room.
It is, yeah, and it's always asked.
Yeah.
It's something there that some insurance companies may have a direct arm, and their insurances are cheaper than what I can provide, mostly around that commission structure. But then is the product actually suited to your needs? So the policy, even though it's done with the same insurance company, may not be exactly the same. So there might be some extra bells and whistles that the insurance broker gets that actually forces you then to, or equates to that difference in premium anyway.
Yeah, and we know the direct market, they are going direct, so it is based on price, and you don't get a free ticket on not using maths because, you know, it goes back to that pool thing. If it is cheaper, if the premium is actually cheaper, it's a combination of two things. Usually there is lack of service, so it's actually cheaper to service the clients, or two, the product quality isn't as good. So there's no magical thing, everyone. Like, cheap doesn't necessarily mean best, because wherever you are in life, whatever you do, whatever discussion, you will pay for convenience, straight up.
Yeah, and the thing I always think about, and why I naturally just use mortgage broker, insurance broker, etc., is if I'm taking the time to go and research 20 different insurance companies for the product that I need, A, I don't know what is going to be the best, but B, it's taking me away from what I do on a daily basis to add value to my business. So that's the cost of that can be far greater, can't it?
Yeah.
It certainly can be, especially if you come up with the wrong scenario.
Yes.
And you find a policy that doesn't particularly suit and doesn't cover you for what you need.
Yeah. So there you go. I think it's particularly if you're self-employed, absolutely. I don't think there's ever a reason why you wouldn't check out an insurance broker. And Lonny has been my personal broker for probably over 10 years. And it's just made my life a lot easier. I've seen claims paid, which I'll share a bit later. But let's now move into the small business types of insurances. And I will say, in any of these discussions, we're not going to cover any personal insurances such as life, TPD, trauma, or income protection / accident and illness. You can go back and have a listen to episode 141 of the podcast, and we go over an hour just on the personal insurances. But for the small business people, and again, if you're not in small business, you'll learn concepts when we talk about public liability, for example. You hear that, it's just knowledge that's good to know. And then we'll move into personal. So we'll look at home and contents, travel insurance, pet insurance, car insurance. Then we'll look into being the investor and having some insurances on our investment properties. So Lonny, small business, a lot of people that are listening have a small business. If you don't have a small business, that's okay, because you're going to learn some insurance terms that you might hear other friends and family members talk about, and then we'll cover some personal stuff and investing stuff. But I guess the main one that most small businesses are told that they need before they get on a job site or before they're allowed to rent a place is the public liability insurance. What's public liability insurance?
Public liability is there to protect you against personal injury or property damage to a third party. So somebody outside of your business. So you're protecting others.
Right.
For instance.
So for example, you're a big guy. Like, not like
not the first
fat,
person that said
but
that.
like you're tall. You're a mountain.
Okay, mate.
Okay.
Dig yourself out of that one. That's fine.
For those listening and watching, and again, if you haven't, you can jump onto YouTube because we're recording this. What's your height?
6'4", 195 centimeters.
Ruckman.
Yeah. So he's a big guy. Now, if you walked into my business here and tripped over that lead and broke your leg and went to sue me for $2 million because that's an expensive big leg,
Yep.
would the public liability jump in that instance?
That's what the public liability is there for. So, yeah, it protects you against that personal injury to a third party. I'm a third party to your business because I'm coming into it. I'm not employed.
Yes.
I'm not an employee of the business. So I'm considered to be a third party, whether I'm here as a contractor to come and do your insurances or a client that's actually coming in to buy something off you, then they are considered to be a third party.
So it's irrelevant what they're there for, basically.
Pretty much.
Yeah. If they're not on the payroll, they're a third party.
That's correct.
Yeah. Okay. So likewise, if you tripped, like how grey is it? Like if you tripped up the step outside because you are coming in here, would my policy still catch you?
It's one of those tricky ones, and that's probably not for an insurance broker to answer.
Sure.
You're probably going to have to talk to the lawyers that are about
Yeah.
on your show and go through that. But the scenario that I give to my clients is that if something like that was to happen on the step there and I was injured, I would then go and see my lawyer, and the lawyer would then ask me what happened.
Yeah.
And more than likely, they'd drag in as many people as they could because they want to earn as much money for their client as they possibly can. So they'd find out that I was going into Glen's business. If Glen owned the unit that we were going into, then he'd come in as the owner of the unit. And if it was part of a strata as well, then the strata would be brought in on an incident. And that'd go then off to the courts, and it'd be up to a judge to award where it actually goes. Now, that legal fees associated with fighting that case, even if you're not responsible for the step that I've tripped over, maybe become quite expensive.
Yeah.
And the insurance is there to pick that up in regards to your public liability cover.
Yeah, so that's a 101, and it's not expensive, is it, public liability?
No, depending on the occupation, and it's the public liability is based on the occupation that you do and how big your business is. It's most of the rating points around how much they actually charge.
Like, what do I do if I've got a little side hustle and I sell seashells by the seashore, and there's a booth by the seashore, the markets, and they say, Glen, if you want to come and sell your seashells by the seashore, you need to provide us a public liability certificate.
Yep.
Is it easy for me to get a policy?
Yeah, definitely. What you want to do, if it is a side hustle and you're a current business owner, you can get it attached to the current public liability cover that you've got and put it under the one banner, or you can take out a separate policy for that particular item that you're doing. So depending on how far different it is from what you're currently doing, will depend on sort of whether it actually fits down the one insurance policy, or whether you need to separate.
That side hustle can be a sole trader or a single entity. It doesn't necessarily need to be a company or a...
No, exactly right.
Yeah. So another, I guess, liability type of insurance, we're in the studio here. I'll pretend we make My Millennial Jam. So I've got, figs at home, and I'm making fig jam out of here. Now, product liability insurance. So if you're a small business that you make products and sell products, talk to us about the product liability insurance.
So most of the time with the public liability, it's also tied up with products liability. So you'll quite often hear it's a public and products liability policy that you're taking out. And if you do have a product, whether you're the manufacturer of that, or if you're an importer of an item, you're actually deemed to be the manufacturer of that item under Australian laws also. So you've got to make sure that if something does go wrong with that product, your jams that you're talking about making, if that was to poison somebody and hurt somebody, then you want to make sure that you've got cover there for that. Because your public liability won't protect you unless you've got that public and products liability cover.
So how much would they work out? Because I think to rent this place, you've got to have $20 million as a minimum public liability. And usually in insurance land, we talk about minimum premiums, right? So it could cost the same for a $15,000 policy, a $15 million policy as a $20 million, because they've got to turn on the computer, get someone on the phone to the broker to work out, like, we just know the minimum cost is $1,000 to service you.
Yep.
So given that it might cost $1,000 for $20 million worth of public liability, how are they working out with the jam how much to charge you? Is it projections on how many we're selling, to what markets?
It goes back to the actuaries that are there to build the rates, and they determine how often an incident occurs due to the product that you're selling. So for a jam, it's probably not a high risk scenario, whereas a children's toy is actually quite high. And you obviously would be expected to pay more premium for a child's toy, being a manufacturer of a child's toy, than what you would be of a manufacturer of jam.
Right.
And so it's just based on the risk.
And how does that compare to a service as opposed to a product?
The service, what do you mean by that?
Like, can you get insurance for that particular service? Like, we run a service called a podcast. right? Can you get insurance on that particular service if something happens as a result of that service doing damage to the person who's been listening in? Maybe the podcast's the wrong example, but...
Yep.
Well, I think what you're talking about, John, is maybe professional indemnity insurance.
Yeah.
So the professional advice that you provide as in regards to the product that you're actually selling. So it might be, let's take mortgage broking.
Yep.
If you've caused a financial loss in regards to the professional advice that you've provided by sending a client in a certain direction and they've lost money as a result, then the professional indemnity cover is there to pick that up, which is another insurance policy.
So an example with the professional indemnity might be you're a chiropractor and you have to pay because you could, crack my back and crack it too far and leave me in a wheelchair. Now, that's because you've directly put your hands on me and have, for whatever reason, caused me injury.
Yep.
So I could basically sue you for that. So someone's professional indemnity insurance would cover that.
The professional indemnity is obviously there to pick up what the public and products liability doesn't.
Yep.
So the public liability is picking up a result of personal injury or property damage to a third party. Now the professional indemnity is more along the lines of those additional costs that are associated with it. So it might be a loss of income or...
Yeah. But I guess
financial loss.
So as a financial advisor, I would have professional indemnity insurance, which I had to pay each year. So if I gave someone some advice and they might have died and there was a life insurance policy that didn't pay and I was playing by the rules, but there was just something that went wrong, that professional indemnity insurance would
Cover
kick
that.
in, albeit with a $25,000 excess or whatever that is, and cover that loss to my clients.
Yeah.
So I guess just as a bit of a recap so far with your business insurance, we've got public liability, product liability if you are manufacturing things or making products, professional indemnity, so it could be a doctor, you're a chiropractor, you're a mortgage broker, you're giving professional advice. Now the next one is, before we go on to like the building stuff and the physical property and goods and theft, workers' compensation, so Nath is employed here as a full-time podcast and video editor. If he walks in and trips on that cable, I've got workers' compensation for him.
That's correct.
Now, how is that different in Australia with different businesses in different states?
It's in New South Wales. It is a compulsory insurances that you need to take out. The government agency called iCare is the agency that actually runs the workers' compensation, and you need to take a policy out with them directly. Now, there are some large corporations that obviously self-insure, but the majority of us are going to have workers' compensation through iCare at some stage if you have an employee.
So it's if you do have employees, it's state-based. And if you had an insurance broker, so if I said to you the other day, I said, "Oh, Lonny, can you hook me up with workers' comp?"
Yep.
You just have to send me to the government agency, basically.
Depends on what state. Here in New South Wales, there's a government agency. In some other states here in Australia, it's actually underwritten by the insurance company still.
Right.
So all states in Australia are all different.
Yeah.
So yeah, you need to talk to either somebody locally to where you are, or an insurance broker that's actually going to point you in the right direction, help you out.
Yeah. So another thing with insurance, is the property insurance. So what falls under property cover?
Property, mostly we're talking about building cover, contents. So contents is stuff that you own within that building, and your stock. So the building's obviously going to cover that physical property that you've got, the building as such. Contents may include your carpets, light fittings, internal blinds, but then all the other items that you own within it. So we have a look around the studio here. The chairs and tables and lighting equipment, camera equipment is your contents. It's not here to sell to somebody that's coming in the door. And then the stock cover is those items that you've got in your shop or location that you're willing to sell to a client.
It's an interesting one, that one's from businesses, because small, medium, large, very hard to sometimes put a value on what the hell is in my office or my warehouse and at any one time. Do you go out and physically have a look and do an assessment with the owner, or how do they usually work that?
As an insurance broker, I'm not a valuer, so really wouldn't have an idea on what the value of the items in a particular location would cost. We do get a little bit of a feeling over the years and having many clients to say, okay, if somebody told me that they had 50 grand's worth of contents within a warehouse that's 3 football fields big, then you go, hang on a minute, something's not quite right there. But when it comes down to dollars and cents, I think the best spot to start with would be your accountant. Go through your asset register and
that's
and
why
find out.
If you are running a business, you need to keep on top of your crap. You got to make sure you know. Like, so for example, I'm renting this studio. My contents cover, I think I've just insured it for 100 grand or something. So there's not more than 100 grand worth of crap in here.
Wouldn't be far off.
But I mean, I've got to insure the blinds because I've installed them. Yeah. So for me, insurance is basically for total loss. And if I can get a partial thing, I'll do it along the way. Yeah. But so you've just got to think, worst case scenario, if the building burnt down, what did I lose?
What's it going to cost you to get back into business? So if you're running your business in there, and quite often it does. With a business insurance, you're going to replace like for like. So if you've got a 10-year-old table, then you'll probably need to replace that with another 10-year-old table. You won't get a brand new one. So that's the other thing to consider as part of your insurance.
Yeah, because I mean, if in your example, if you're saying, well, I might just insure it for 90 grand instead of 100, and then you went to replace it, like that 10 grand difference is massive when the policy might only cost you an extra $100 a year.
Yeah, exactly right. And the other thing to be concerned about with commercial insurance policies, and there's a lot of commercial insurers around that will have an average clause on their insurance policy. Now, that's there to penalise you at the time of a claim if you don't insure it for close to its full value. Now, the difference, like you don't have to be to the dollar before they penalise you, but if you try to insure something for half of its full value and then try to make a claim, then the insurance company, as part of that clause, could turn around and only pay you half of that, the value of that claim, even though you think you've got enough there to cover it.
So, okay, let's just change tack and example, and they won't mind if I use them as an example. My good friends at Glee Coffee Roasters, they're also a client of Lonny's, and Chris had it was almost a $10,000 coffee machine in the back of his car one day, okay, which would be insured under their property policy, okay? Now, and if you go to their checkout, gleecoffee.com.au, and use the promo code M3, you'll probably get a 15% discount on coffee still. So there's
haven't said that for a while.
Yeah, no, a bit of an ad there. They've still got it there. So Chris's car was parked somewhere in Newcastle, and someone vandalised it and set it alight.
Oh, no.
So his personal car set alight.
Coffee machine worth more than the car?
Yeah, the coffee was like a 10, 13 grand coffee machine in a bloody $2,000 piece of crap that he had at the time. What was the outcome there, and how did it come about with the claim?
So what happened there was, because Glee Coffee have actually got their contents and stock cover at a particular location, one of the additional benefits under the policy that they had at the time was items that were temporarily removed. Now, that doesn't cover it for everything that you've got here, but insurance companies do realise that you do take particular items out of your location and take it off somewhere at particular times. So in this instance, that percentage was high enough to actually cover this coffee machine, even though it wasn't located at those premises that they actually had the insurances on.
Right. So if it was some obscure item that they logically think, well, you'd never actually have that in transit, they could deny your policy.
Yeah, exactly. So the other thing, if you don't have that building and contents, or your contents and stock cover somewhere at a particular location, let's take a tradie, for instance, that carries around his tools and equipment, you can't rely on that percentage because you don't have the insurance cover at a particular location, you can then insure it as what we class as general property cover, which is an Australia-wide cover for those tools and equipment that you would regularly take out in your van or whatnot.
Yeah.
So that's the other way that the coffee machine could have been covered if we had to go down that path.
So it would be a common claim, the old tradies' tools being stolen, wouldn't it?
Yeah, you quite often see it out of the back of the ute, and there's obviously the insurance companies are starting to pick up on that now, and you've got to try and help yourself a lot of the time in insurances. So you don't want to leave a $10,000 circular saw or just lying around in the back of an aluminium tray on the back of the ute for somebody to walk past, pick it up and go. You need to be able to try and lock it up. So have that toolbox that's connected to the ute or a van that's locked.
Yeah. So I guess it is that thing. If you are running a small business or you're thinking about it, have a chat with Lonny and tell him your personal situation so he can go back and say, look, based on what you've told me, I believe this is most appropriate to cover the risks that you're not willing to carry. And I'll give you an example. This studio here, it is absolutely compulsory when I sign the lease to provide a certificate of currency for glass, because landlords, I don't like their buildings insured, but they always make the tenant have glass cover. It's so dumb. But I can't get this rented unless I've got public liability. So there's can't get out of that. And they will usually, a landlord will ask to have a look at the certificate of currency each year.
Yeah.
So you've got to kind of have it.
And it's not just landlords that'll actually ask for that. We're starting to see that across all occupations now. And I'm even saying to my clients that if you've got a contractor that comes onto site, you need to cite a certificate of currency to prove that they've got public liability in place before they come onto your site.
Yeah, absolutely.
So it doesn't have to be a landlord. It could be anything really. If you've got a contractor coming onto site, it's best off to try and ask for that.
But I guess following on, it was compulsory that I get that. But if we go to the thing with insurance and transferring the risk, it's not compulsory that I insure the lights and the cameras and the microphones.
No.
But what it is in my personal life, if there's 80 grand or 100 grand worth of gear here, I've made the call that I would rather pay a premium of, and I'll make it up, $1,000 a year to transfer the risk.
Yeah.
So I don't have to carry that risk of losing $100,000.
Yeah, there's a sleep at night factor there as well, isn't there?
However, if I was worth $5 billion, I probably wouldn't insure 80 grand worth of gear, 100 grand worth of gear. I would self-insure. I've got enough money to just take that risk on myself.
Yeah, and that's what you've got to weigh up in that transferring a risk. Can I afford to lose that? If you've got $1,000 car and it's going to cost you $1,000 in premium to insure,
that's a common one, isn't it?
That's quite often happening at the moment. But if you don't care about your car itself, what about that third party?
Yeah. And if you've got a car, as a minimum, third-party damage.
Third-party property damage only.
Isn't it?
No, it's not. The green slip's compulsory, which is the personal injury associated with a car accident. That's in New South Wales.
Yeah.
So the third-party property damage is obviously going to pick up damage that you do. So even though your car's worth $1,000, if you run that into a $1 million Ferrari or a $500,000 Ferrari and you damage that, where are you going to find the money to cover that? And that's what that third-party property damage only cover will cover.
So there you go. If you're a small business owner, chat with Lonny. We'll put his details in the show notes, and he's helped me out for the last however long, and it's just been really good. And to be honest, there's been times where I've sent in Lonny a quote from insurance.com or just the normal website, and the policies that he can get have been cheaper and better. And he still get paid. It's just wild.
And the thing in that example is he knows your life inside and out as well. So
and as well, remember, there's a cost for convenience. Okay, so when I went to China, I was broken into. I had 2 laptops stolen. Didn't lock my house, forgot to, but we didn't tell them
You didn't tell me that part of it.
Well, no, they didn't ask. You didn't ask. So I lost 2 laptops, okay? Now, it was basically a text message or email to Lonny. He sent a form. I filled that out quickly, sent it back to him. Done.
Yeah.
So even if my premium for my home contents cost $100 more a year, my situation, I'm too busy, if crap happens, to have to deal with other crap. Because I was running a business, like, for me, it was worth, and it was actually, I think it ended up being cheaper than NRMA, who I was with anyway. That's why I just moved it with you. But it was the hassle factor that he sorted it out. The other chance that I've used Lonny, when I was watching a movie on my iPad in the bar, and the iPad fell into the bar.
You shouldn't
serious?
have covered him for that crap.
So again, it was.
He was lucky that I got stupidity cover for him.
Yeah, that's right. Yeah, and then it was not even a week later, there was $1,200 in my bank account because that was also picked up on my home contents. So he's been good for me. And then I lost my watch once, and he was then I found it, so that was good.
Hey, Glenn, did I tell you that there's no insurers that want to take you on this year?
Yeah, that's right. It's uninsurable now.
So let's move on to some concepts around our personal insurance. So home and content insurance. What should people be looking out for?
You've got to have a look out for what it is that you need covered. Again, we're transferring the risk, so you've got to have a look at it. Every insurance company is different. Every insurance policy that those companies sell is different. So just because an insurance company can do this part of your business or personal life doesn't mean they're going to be able to do the other part. So they may be good at the building insurance, but no good at contents. So you've got to be able to find something that actually suits your need. Now, there's insurance companies around, and I saw that recently with a client of mine that had actually left and gone off and taken a cheaper premium somewhere else. Their kitchen got damaged as a result of water. I think the pipe burst behind the sink and damaged all the kitchen cupboards. Their claim got paid by the insurance company, but it was limited to $7,500. Now, $7,500 for a kitchen isn't a great deal. So it's those little things that you need to be aware of, and you need to have a look at the insurance policy. So just comparing premiums alone is not good enough. You need to be able to have a look a little bit deeper and find out, okay, do I need cover for a particular reason? Have I got these limitations of, say, $7,500 on a kitchen that I know I've just spent $30,000 to $40,000 to put in?
So when someone's buying a home for the first time and they've got a loan associated with that, that lender will say, show me your certificate of currency for this minimum amount.
Correct.
How do you find that minimum amount stacks up against the real value?
It's a difficult one. So comparing it to others, sometimes you look at it and go, okay, that value that they're asking you to do seems a little bit more than what it actually should be. And then I've also got some calculators that have been set up by industry experts. They're builders and they're assessors and all sorts of things. So they've had plenty of experience in seeing the costs associated with it. And you run those calculators and you see that it's probably not far off where it should be. Now, me personally, I'd much prefer to be a little bit overinsured and pay a little bit extra premium than to be underinsured.
Yeah.
So, but that's just me. That's the way I do things. But doesn't mean that I go and insure my building for $1 million when it's only going to cost $200,000 to replace, because I'm only ever going to get $200,000.
Yeah.
Yeah. So I guess with home and contents insurance, a lot of people have expensive crap and weird stuff. So someone might have an engagement ring worth $5,000. Is it safe to assume that jewellery is automatically covered on every contents insurance policy, or should you be checking?
You should be checking, definitely. So every policy is probably going to cover you for those jewellery items, but it's just a matter of what they actually cover you for. Some will automatically include an engagement ring, but they may limit it to $1,000. Others will cover that engagement ring, but only cover it at the situation. Now, how often does an engagement ring sit The girls always want to show them off, don't they? And go down the street and
So, for example, would they say we'll cover it if it gets stolen but not lost? Have you seen those type of wordings?
Yeah, you occasionally see that. I have seen a number of clients that have a separate policy for those valuable items. So that insurance company that would only protect that ring when it's at home and only cover it to $1,000 can actually insure it to the full value, as you're saying, of $5,000 and cover it outside of the location. But you need to pay an additional premium for it.
And that would be called a rider to the policy.
Yes.
So if you had... Take the example of the engagement ring.
Yep.
Under is it specified items or something?
Yeah,
that
specified valuables, specified items.
If you've got that sitting there versus underneath the general amount, and it fits within that general amount, is there any benefit to having it exclusively specified or not?
If you want it insured for if it fits under the limits of that particular policy, then there's no need to specify it. As long as that policy covers it for anywhere in Australia or even if you're travelling around the world, and it's covered to that full amount, then there's no need to specify it.
Yeah, because the one thing that I always get is, well, I've got an item that's worth X amount. Now, it sits under the total amount covered, but... It's an unusual thing. Like take a road bike, for example, that you physically have to push, not a motorised one. That might be worth $6,000.
Yeah. What's yours insured with?
Yeah, well, I've actually got that as a specified item because I don't want to have any hiccups when it comes to claiming if I need to.
That's fair enough.
Did the cost of the insurance increase for you to specify that by?
I believe it did, yeah.
Which... Usually, because the cost increase by default means that it wasn't going to be automatically.
And that's what I'm getting at is, well, you don't want to be any surprises. It's bad enough that something's been stolen or damaged or whatever.
Yep.
The last thing you want is a policy claim rejected, right?
Yeah, definitely. And me being, I love my outdoors and love to go camping. And I've got a accidental damage policy for my home and contents insurance. So it'll cover my contents anywhere in Australia. Yeah. So that includes my camping gear. So whenever I go away, we were away in January with all the bushfires that were about, and people were saying, okay, what are we going to do here? Are we going to pack up and grab everything and run as soon as we see a fire? And I said, I'm actually going to leave all of my belongings here. I said, I know that they're insured. I don't have to worry about it at all, and I'm just going to get myself out of there.
Yeah, I need some new gear anyway.
Yeah.
Were you leaving Tash and the kids, or were you...
Glenn, don't put me in that position, please. I was grabbing Tash and the kids and throwing them in the river and swimming away from the bushfire. The belongings were definitely going to be left there. But that is something that you need to take into consideration. Now, a road bike, as you're talking about, may not be covered whilst you're actually using it in a race, but do you need cover for that whilst you're actually travelling around and going to races?
Yeah.
So I had a good friend of mine that I do the insurances for. He had his $8,000 push bike on the roof, and he decided, or he didn't decide, but his roof racks decided to let go. Oof. And his $8,000 bike came off the top of his car.
Yeah.
And he said, Lonny, help me. What's the go? And I said, mate, we put you under the accidental damage policy, so I said it's not an issue.
Is that code for I went under an underground car park? And
he didn't tell me that much, but I'm assuming.
Funny, because I think it's all about that transfer of risk. Like, if you dropped $6,000 tomorrow and lost it, probably don't heaps care, but I think it's with the psychological factor that if something happened to my bike, it's taken care of. Like,
totally, it's just that convenience, and when you're at a time when it's so stressful anyway.
Yeah,
like
totally.
You just don't have to worry about.
And that's one of the best parts about my job is actually having a phone call from a client when they are panicking because they've had a $6,000 bike. Either lost or stolen or fallen off the back of the car, and you're able to ease the mind of somebody and say, look, don't be concerned at that. And that's what Glenn was doing with his laptops and his iPad. puts it straight up on Facebook. Oh no, I've dropped this in the what's the name? Yeah. So you didn't know what to do, and to be able to send him a message and say, you do know that's covered under your insurance,
which I didn't even think of. Yeah. I thought it was my fault.
Yeah.
I'm watching bloody the Notebook in the bath, the candles on, and it's a fun time.
Yeah.
It sounds far too romantic.
Yeah, when you're on your own.
And then
but like there is, like, it's obviously not stupidity insurance, but like where do they draw the line to say, well, you shouldn't have had a laptop in the bath?
Yeah, look, it is what we're classing as an accidental damage policy. So accidental damage or loss is a stupidity cover, really.
Yeah. Well, it's an accident.
It's just there to stop. It'll cover an accidental loss as long as you don't physically try to damage it. So if you were to get out your hammer and smash your laptop or your $6,000 bike and chop it up with a saw, then they're not going to cover that because you've intentionally gone and ruined it.
No.
But it's there to protect those accidental damage losses. So.
Absolutely. So I think with your home and contents, I just want to make it clear, if you own a home and you can't afford home insurance, like at this point, I don't care about your big screen TV in your lounge. That's whatever. But if you can't afford building insurance, you can't afford to own the home.
No, definitely.
And it was so sad to see the bushfires rip through and destroy all these homes with people uninsured. It sounds really crass, but could they afford to be a homeowner to start with? And I mean, it's so sad, but we've just got to know it should be considered the cost of home ownership, because you get one chance or if it floods, like, I don't know, it's just because it's our biggest asset other than our own income is the dwelling that we live in if we own it. So number one. And number two, if you are renting, you can just get contents insurance to cover. And when I was renting, Lonnie, I thought, okay, contents, I'm only insuring for total loss. Like, I'm not insuring if someone walks in and grabs my laptop. I was renting, just didn't care. But if the place that I was living got burnt down or flooded, total loss, okay, well, the bed's $2,000, the fridge is $1,000. Like, it could add up to 50, 60,
Quickly
70 grand pretty fast.
Yeah. Actually, the biggest thing that people get lost on is that they have a look at their large furniture that they've got inside a unit and they go, okay, I've got the big screen TV, I've got a lounge and I've got a bed, and that's $5,000 or $10,000. That's all I need to insure. But probably what I'm starting to find is the biggest asset that you've actually got in your house are your clothes. Now, if you're looking at a new for old replacement, it's very hard to find a pair of jeans or a pair of shoes under $100 or a couple of $100 these days.
Yeah, well, Glenn's got 600 sitting on his left foot now.
Mate, you've got RM Williams as well. But yes, I've got 3 pair of RM Williams worth 600 each. Like, if the place got burned down, that's a lot of money.
Yeah, you've just got to think about what it is that you do have in there, and sometimes it is worth having a look at it and going, okay, how much have I actually got?
Yeah, and you mentioned before about go to your accountant and you've got an audit there and a stock take. You don't have that in your personal life, do you? So it may be an exercise to do an annual audit.
And the other thing when you do make a claim is that you've got to have proof of ownership of the items that you've actually lost or have been stolen.
So every time
what do you have? Have you got a receipt for those items? And the biggest thing that we can actually use at the time of a claim is a photo of these items.
Yeah.
So why not run around your house and do a stock take and take photos of items and say, okay, well, I've had this. And then when you do have a claim, you've got that proof of ownership there. It makes it a lot easier.
Interesting story. About a couple of months ago, I had a Garmin watch. Right now, that Garmin with technology connects to your Garmin Connect system in the cloud, and I rang up and said, "Look, my watch is on its way out. This is what it's doing." And they said, "Okay, name and number," and they put it in their system and they could see my activity records in my Garmin Connect. So
Wow.
they said, all right, that's cool. We know that that's your watch. All you need to do is send it in and we'll send you back out a new one. So I didn't need any receipt, didn't need to know when I purchased it because they know it's my watch.
Yeah, well, that's just they've used the brain, basically. They've
Yeah,
got the technology
which
and they're
is
using
pleasing to see. They've used
Totally.
technology.
It makes it a lot easier when it is somebody's product. But
Yeah.
an insurance company, unfortunately, doesn't have those.
No, true.
But that might be a way for you to actually get that proof of ownership on that one item.
Correct.
And go from there.
Yeah.
So I think we'll move on from your home and contents. You've just got to check it out. To a point, I think, and we won't talk about it, but pet insurance, for example, I think owning a pet is a luxury. Therefore, pet insurance is also a luxury. And I'm kind of the view, if you've got a fully funded emergency fund, maybe you don't need pet insurance. But if you've got a fully funded emergency fund and you've got a spending plan in place and all's good, you might go, all right, we'll stuff it. I'll pay $20 a fortnight with insurance. I'm pretty much whatever on the pet insurance thing, so we won't go into that because
You don't.
it's just, yeah.
Yeah.
I don't have any real comments on the pet insurance.
Yeah, we do have it from the basis of we know that our pet has a certain ailment that continually needs to be readdressed.
Yeah.
So, we could use our bucket for it to cover it, but insurance just makes sense from that point of view. So
Totally. Let's move on and talk conceptually about travel insurance. Now, travel insurance, COVID-19, there's a lot going on in the globe at the moment with insurance, particularly around travel insurance. So this certain pandemic aside, conceptually speaking, do travel insurance policies cover loss due to pandemics?
Pandemics, it'll actually depend on the insurance policy that you're with.
Right.
And that's one of obviously the topics that we are talking about across all products that we do talk about today. Every policy is completely different. Now, some are covering a pandemic and some aren't. So you really need to know what's going on. Now, in regards to the travel insurance, with trips to China, there was a ban put on that. Where are we now? The end of January 2020, where the DFAT had actually declared it a do not travel zone.
Yep.
So if you go into those do not travel zones under your travel insurance, then you are going to have an exclusion on that policy.
Yep.
So the do not travel advices that do come from the government are there for a reason.
So you're saying a lot of the insurance companies will look at the DFAT website to see if they'll cover risks based on what the government is saying?
Yeah, exactly right. So if you need to cancel a trip because of that DFAT warning, then you still need to check on your travel insurance policy and make sure that you are covered for this pandemic that's going on at the moment.
Right.
So, go on.
Yeah, well, I was going to say, because with travel insurance, we've got to just remember it's an insurance policy. So remember when there was the volcanoes in Bali? Okay, so volcanic eruption happens in Bali, flights cancelled, trips cancelled. Yep, sweet, I'll claim my travel insurance. Most travel insurance companies would pay the claim, but then they would say, okay, whoa. We know that there's a volcano. We know that it's going to happen. So if you take up a policy from now or book a ticket from now, you will be excluded because it'd be the same thing.
It's a known event,
Yes.
and that can be the big issue.
It'd be the same thing if I rock up to my uninsured home tonight and it's on fire and it's not insured.
Yeah.
And I'm calling the insurance company and they can hear the crackles in the background. They're not going to insure you because the actuaries need to balance that. There's a higher risk of it not happening.
Yeah.
So in the travel insurance space, where do you decide, I definitely need travel insurance? Because I'm going to Brisbane on Friday. Fly in, fly out, no overnight.
Yep.
I'm not getting travel insurance.
Okay. That's fine.
That's just me. But what's common? What do you see?
So the things that the travel insurance or that you want to protect are obviously going to be your medicals.
Yeah.
So your medical is going to be not as a bigger concern here in Australia because we are covered by Medicare. We're very lucky here in Australia that we do have that system. So if something was to happen to you in Brisbane and you had some medical issues, then Medicare is going to cover that anyway for you. If you were travelling overseas and you had a medical issue, Medicare is not going to pick that up when you're travelling. So you need that travel insurance then. The other thing is going to be the cancellations. So if you're out of pocket for the flights that you've booked or the accommodation and you've spent thousands of dollars on that and you want protection because you don't want to lose that, then that's another reason for you to take out that travel insurance.
Yep.
The other big one that I sort of rely on too is the hire car benefit that's under a travel insurance. If I'm hiring a car when I go somewhere, quite often the hire car company will have a really large excess.
Yes.
And that can be covered by your travel insurance up to a particular limit.
Yeah.
So, and if that travel insurance limit isn't high enough to cover the limit that the hire car company has got, then you need to pay that daily rate that they actually do charge you. So, which can be quite expensive.
It can.
So your travel insurance can nearly pay for itself if you are hiring a car for 5 days. Because if you're paying $25 a day to bring that excess down with the insurance.
So can I get a blanket travel insurance policy for 12 months that covers things like that? When I'm
you definitely can. Yeah. So definitely under a business, we've got a corporate travel plan, which will cover you and your employees for all personal travel that you do throughout that 12-month period.
Cool.
And that'll be whether it's Australia or international. You do a declaration at the start of the year or an estimate, and then a declaration at the end of the year and work it out accordingly. And the premium's based on that.
Yeah, so I think you need to realise with travel insurance, I think it's controlling the worst case scenario. So it would be if you're ill or fall sick overseas, or you get rushed to hospital or helicopter's called, that's when you want your travel insurance.
Yep.
If you've lost a $1,200 ticket because of a pandemic, which basically grounds the world anyway, you can kind of see why most travel insurance companies won't cover a pandemic. It sucks, but it's also okay because I think the reason we need to buy travel insurance is if we get sick overseas. That's my view of it. And the hire car overseas.
Yeah, you just have a look at the medical costs associated with some overseas travel. I know my brother went to America in the last couple of years and had appendicitis when he was over there and spent a little bit of time while he was travelling in hospital getting that taken out. And the bill for that was, I think it was $60,000.
Wow.
So do you pay a couple of $100 or $1,000 for your travel insurance before you go, or cop that when you get over there?
It's no brainer, isn't
And going with this COVID virus at the moment, I did hear the other day that if you were sent for isolation in an American hospital, it's something like $84,000 for 2 weeks stay.
Yeah.
So
it's a good hotel.
But if pandemic isn't covered on that policy, you can't get it anyway.
No, you won't be able to.
No.
And the other thing that we do need to consider at the moment are these travel bans, but also the dates in which things have arisen as a result of the pandemic. So if you're trying to organise to travel anywhere in the world at the moment, you're probably going to find it very hard to get cover anywhere for it because it is a known event at the moment.
Yeah.
And that cut-off date was the beginning of March 2020 worldwide.
Almost like the volcano thing with the Bali that I was talking about with Bali. Yeah.
So if your insurance policy actually has pandemic cover and you've booked and paid for your travel and organised your travel insurance prior to the 24th of January, then you're going to be fine to cancel it. You cancel your trip as a result of the do not fly or Australia telling you that you can't go out of the country. As long as your insurance policy covers you for pandemic, then you will be able to get a refund on those tickets that you've done.
Yeah, it's just if an example is if the known event date was the 1st of March, for example, and then you bought your ticket on the 2nd of March to America, for example, and you bought your travel insurance policy on the 2nd of March to America, so it's after the date, still you can fly to America. That's no problem. If you cancelled because you didn't want to go because you feel scared, you're not going to get covered because that's your choice.
Yeah.
But when Trump turned around and he said, oh, we're not letting any citizens in, at that point, it's out of your control. But because you're after that date, you're not covered.
That's
but
correct.
If you got your ticket, got your insurance policy before the known event line in the sand, and it was cancelled because of maybe Trump closing the borders, your trip to America, you would likely be covered.
Yeah.
But before he made the decree that no people other than citizens could come in, and you cancelling just because you've changed your mind, it'd be likely not covered because you've just changed your mind.
Insurance isn't there to cover you for your change of mind.
Yes.
It's to cover you as a result of a third party doing something to
Unforeseen.
stop you. Yeah, something that's
Yeah,
unforeseen.
so I think it's important to know that with travel insurance, this is why as soon as you book your holiday, book your travel insurance policy.
Yeah.
Before you, don't do it the day before you go, because you've got a higher chance of getting your money back for your flights if you have the travel insurance policy booked, lodged, paid for before.
There are times when you actually do need to use that travel insurance prior to you actually travelling.
Yes.
And that cancellation is obviously one of those.
Yes. So there you have it on the travel insurance. Okay, so the last kind of segment to this insurance discussion is if, John, you've got a client who's buying an investment property. So, Lonny, talk to us if one of John's client is buying a standalone home in suburbia as their investment property. What type of insurance do they need to consider? What's compulsory to the bank and what's optional to the landlord?
Okay, so your word that you used there was landlord. So there is landlord's insurance around that a owner of a property that is going to be a landlord and have tenants within it can have specialist cover required as the property owner of that building. Now, that might be additional cover for damage to the property by a tenant. It might be rent default, which is a result of a tenant defaulting on rent and leaves their lease agreement early. And then, of course, you're going to have the public liability cover associated with that as well.
So, question on normal houses and investment properties. Do all home policies and in property policies have a built-in public liability?
Yeah, with your home and contents. If
Yes.
you're a homeowner and living in that property, then you are going to have public liability cover associated with that as well.
And same if John's client or John has an investment property, there will be public liability built into the landlord's insurance policy.
Just check and make sure that you've got it, because it's not always standard, depending on the insurance cover that you want.
And that's where some investors can actually cry foul is they have this building insurance which covers them in the event of fire and whatever else, but they don't have the landlord's insurance component, which in my mind is a much regular occurrence than the house burning down. So yeah, you definitely need both.
Yeah, I've seen it far too often where tenants have caused damage to it, and the building, when they've moved out of it, is a complete mess. Whether they've torn through the property and intentionally put holes in walls and ripped carpets up and stolen air conditioners.
If I had a landlord's insurance policy and my tenant drove their Harley Davidson into the lounge room, changed the oil, wrecked the carpet, that policy would cover the trashed.
Yeah, you've just got to check and make sure that the policy that you've actually purchased does include that.
And what about if they don't pay rent and default on rent?
It's an additional cover there that you can elect to take out.
Yeah.
So just check and make sure that the policy that you are purchasing is covering those items that you actually want or need.
So your common terms there are malicious damage and rent default, aren't they?
They're the big ones when you are a landlord, and that's where you're going to lose, unfortunately, if you haven't got the right tenant on board. You are going to lose the most amount of money.
Yeah.
Probably prior to you losing the building.
Yeah. And finally, so my home where I live, there's 3 townhouses. Much like if you had one townhouse as an investment property in those 3 properties, the body corporate needs strata insurance for the building. So talk to us about strata insurance and what it actually covers and what it doesn't.
Strata insurance is covering the the property that is owned by the strata. The strata is what's the term that you would use, John, for a
Common
strata?
property?
So you got a body corporate that has the insurance for that common property.
That's correct.
Which is can be wide and varied, because you can have a community title and you can have strata title, and you got Torrens title. Now Torrens title's on its own without confusing the matter, but a strata insurance is for essentially the common property throughout the
that is
complex.
common to all owners. So if you've got a building there and the owner of that building as such, there may be unit holders. In Glen's instance, there's obviously 3 different units there, so you're going to have 3 different owners. But the strata actually owns the entire property. And now that's common to everybody, and you do need to have strata insurance across that.
So the difference with strata insurance, if a tree fell through my unit 3, and wrecked the roof and fell through and damaged the gyprock, the strata insurance would cover the external of the property.
Correct.
But the inside gyprock and the light fixture or the tiles or the curtains, my contents policy has to cover those.
Yeah.
And that's different in every state, from what I can gather too.
That's right.
So some states will obviously cover some things that other states don't. So it comes down to that interpretation of what's actually considered to be a part of the strata. So sometimes the drywalls within the unit, the gyprock, may actually be covered by the strata insurance, but the paint on the wall might actually be the unit holder's option, and they need to have that covered. So you just need to check your terms and conditions on the strata, and most stratas, by the sounds of it, are completely different as well.
Yeah, definitely cover your strata insurance policy before you get your own individual one, because there could be some gaps in there and you don't realise till the time of claim.
Yeah. So like anything, you need to get specific advice and help for your own situation. Life's full of risks. I don't believe insurance is about removing all those risks, but it's just about helping, taking on some of the risk yourself, which might be, I've got an excess that, I have to pay $1,000 excess. I'll take on the first $1,000 worth of risk, and then the insurance policy will capture the rest of the event. I just think if you're going to use insurance, you just got to be wise and just get the right advice, because you can insure everything if you want. Don't buy bloody insurance for your TV. Don't buy bloody insurance add-on for your car, because all this auxiliary insurance crap, it is marked up, and that's where businesses are making their money now. You go into JB Hi-Fi or Hardly Normal or Domain or whatever and buying a TV, and they try and sell you the insurance. It's because they're selling the TV for cost, gets you in the door, they'll make money on the finance and the add-on insurance. I think you can take the risk on a $1,000 TV after it breaking after 1 year. Take that risk yourself. Don't buy a $23 a month insurance policy or some BS for your dumb TV.
Yeah, true. And the example you gave with the bushfire is absolutely hits home when the policy might cost you $1,000, $1,300, $1,500 on a $500,000 building that you can replace for that $1,500 policy, versus being $500,000 down the drain because you didn't take out a policy. Like, absolute no-brainer.
Yeah.
So you can reach out. We'll put Lonnie's details in the show notes, or you can Google Lonny Hawkins, Shortland Insurance Brokers. Tell him Glen sent you, and I'll make sure he looks after you. So thanks so much, Lonny, and we'll talk to you soon.
Sounds good. Thanks, guys.
Bye.
Thanks.